The banking sector is in a sweet spot, with sustained growth in bank credit, low levels of non-performing assets, and adequate capital. Reserve Bank of India Governor Shaktikanta Das has said that both banking and corporate sector balance sheets have been strengthened, thereby engendering a twin balance sheet advantage for growth. A column in Business Line jointly authored by former RBI Governor C. Rangarajan and B. Sambamurthy, former Director and CEO IDRBT, points to the dramatic reduction in the gross NPAs of banks. In FY18, this ratio was as high as 11.2%, raising concerns on the stability of the banking system. This has come down to 3.9%. After reaching a peak of 10.3 trillion rupees in FY18, GNPAs came down to 7.4 trillion rupees in FY22. GNPAs as a percentage of credit came down from 11.2% in FY18 to 4.3% in FY22, going down further to 3.9% in FY23. The duo also call attention to the substantial write-off of NPAs by banks year after year. The total write-off since 2016-17 amounts to around 10 trillion rupees. The Financial Stability Report of June 2023 observes that the write-off to GNPA ratio, which had been declining consecutively through FY21 and FY22, rose in FY23 due to large write-offs by private banks. In itself, write-offs are not bad. After all, banks can do it only if their bottom line support it. Adding to FSR, June 2023, banks' GNPA ratio continued its downward trend and fell to a decadal low of 3.9% in FY23, with net NPAs at 1%. Yet you can't help but raise the question, are fresh NPAs lurking around the corner?
We know that the banking system NPAs are clearly on a downtrend over the last few years. And this is clearly, happening after the peak that we saw after the asset quality review, which led to a spurt of large corporate NPAs in the banking sector. After that, and when the banking sector NPAs had actually breached 10 lakh crores NPAs, there has been a downtrend from that peak. And if you look at the numbers, it has not been really only because of recoveries. It has also been because of significant write-offs that particularly the public sector banks have done. As far as the current NPA situation is concerned, the numbers tell us that the gross NPAs have for the system as a whole have come down to around 4%. Where the issue today is that there is a very rapid growth in unsecured loans. For example, unsecured loans to retail individuals and unsecured loans also to small businesses. That is where we believe that there are risks, although it is yet to show up properly in numbers. But we should also understand that there are many restructured loans as well, where these loans need to perform over the next 1 year or so.
Is retail a problem area? Of late, Mint Road has sought information on the retail book of banks, especially unsecured credit. FSR June 2023 calls attention to retail loans. They grew at a CAGR of 24.8% between FY21 and 23. This was almost double the CAGR for advances in the same period. The composition of secured and unsecured advances has changed during this period. Unsecured retail loans increased from 22.9% to 25.2%, and secured loans declined from 77.1% to 74.8%. The RBI's report on trend and progress of banking made an interesting observation. In recent years, Indian banks appear to have displayed herding behavior in diverting lending away from the industrial sector towards retail loans. Empirical evidence suggests that a buildup of concentration in retail loans may become a source of system risk, said the report.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.